Well, here in Spain, it's time to catch up with Cathal Rochford from Blevins, France. How are you doing, Cathal?
I'm doing very well, Howard. Keep very busy at the office, but all's going well. It seems to be a very quick run in towards the end of the year.
Yeah, I think when it gets busy, the time flies even faster. I think
Absolutely.
that's something we could
Absolutely.
both agree on.
Yeah.
Yes. Well, of course, you're in Mallorca today, and as we're into the last quarter of the year, autumn is setting in, and we're starting to look ahead to 2026, dare I say so. Before we get there, we'll hear what tax reforms the UK budget will include, and the new year in Spain may bring a couple of changes too. So, it seems an appropriate time to return to one of our annual topics, Tax Freedom Day. So, Cathal, what is Tax Freedom Day?
So, Tax Freedom Day is the day in the year when the average person has theoretically earned enough money to pay off all their taxes. Everything from income tax, sales tax, property taxes, and so on. So you can think of it like from January 1st up until Tax Freedom Day, all of the money you earn would go to the government. After that date, the rest of what you earn is yours to keep. It's a way to show how big the total tax burden is in a simple, relatable way. The exact date changes each year and can vary between countries and regions. If taxes rise, Tax Freedom Day moves later. If taxes fall, it comes earlier. Even if you are retired, you still face tax on savings, investments, and pensions, not to mention the amount payable in VAT and things like that. So having paid so many taxes all your life, you will not want to pay more than necessary. And that's why tax planning plays such an important role in protecting your wealth and legacy.
How do tax freedom days vary across Europe? Which countries had the earliest and latest day this year?
Yeah, good question. So each year, the Institute Economique Molinari, if I pronounce that correctly, compares the taxes payable by the average wage earner across EU member states, as well as the UK. So they measure how many days of the year are devoted to paying taxes. While this study mainly focuses on the average worker, it illustrates the general tax burden of each country and how they compare to one another. This study calculates a tax freedom day for each country, which is the date on which an employee has earned enough to pay off all the taxes for the year and can start to use the fruit of their labour as they please. For 2025, the average tax freedom day across the EU was the 11th of June. 13 countries had an earlier day this year, with Maltese taxpayers coming out on top, gaining 17 days, but 15 countries are experiencing a higher tax burden. While Cyprus had the lowest date for many years, this year it was overtaken by Malta. Malta's tax freedom day fell on the 15th of April this year, followed by Cyprus on the 24th of April. France once again had the latest tax freedom day on the 18th of July, followed by Belgium, Austria with the 16th and 14th of July respectively.
How did Spain do? Where does it fall in the rankings?
Yeah, so according to the study, Spain's tax freedom day fell on the 14th of June of this year, 4 days later than the previous year, and the 16th in the rankings. For the first 165 days of 2025, every cent earned by the average Spanish employee was taken by the government in taxes. The average real gross salary in Spain is €39,481, but after tax, workers are only left with €21,733 on average, making a real tax rate of 45% in Spain.
And what about the UK? These are interesting times there in terms of tax.
So according to the study, the UK's tax freedom day landed on the 8th of May with a real tax rate of 35%. However, many think tanks undertake their own research using different methodologies. In the UK, the Adam Smith Institute, or the ASI, establishes Tax Freedom Day by measuring the entire tax take, including indirect taxes. The ASI's approach places the UK's 2025 date more than a month later on the 12th of June. This is 6 days later than last year in 2024 and 21 days later than before the pandemic. And the study warns that things are in fact getting worse. Based on current current taxation and government spending plans, the Office for Budget Responsibility projections, the ASI research concludes that the UK's Tax Freedom Day will fall on the 24th of June by 2028, higher than during World War II, in fact. And by 2030, it could fall over halfway through the year, with taxation surpassing 50% of net national income. The ASI explains that in-year taxation hasn't reached such heights before, not even during wartime. The economic crisis of the 1970s and reforms of the 1980s. Its research also shows that this tax burden is increasingly carried by the rich. The top 1% in the UK paid 28% of the UK's total tax burden in the last year, with the top 5% paying almost 50%, and the top 10% contributing 60% of the total tax take. So with wealthy taxpayers leaving the UK as a result, the Adam Smith Institute predicts the UK is on course to lose the greatest proportion of millionaires in the world within this parliament, raising questions about the viability of our current tax regime. So it's a worrying trend for sure in the UK.
Do you have any words of advice for our listeners, Cathal, in view of all of this?
Yeah, good question, Howard. I would say if you feel you're paying too much tax this year, now is the time to take action to establish if you can mitigate or minimise your liabilities for next year and beyond. I think it's important to look beyond your annual tax liabilities to determine if you can improve your estate planning position for your family too, in terms of inheritance tax. In many cases, there are steps you can take to lighten your tax burden, especially on your capital investments, pensions, and your estate for your heirs in the future. Cross-border taxation is highly complex, and it's important that you don't risk getting it wrong or paying too much tax or more tax than you actually have to. So my advice would be take personalised, specialist advice, and you may be surprised at how much you can actually improve your own tax situation.
Well, thanks, Cathal. Since you're back again next week, shall we look at tax planning and mitigation in more detail then? And of course, we must remind our listeners about the website.
Yeah, happy to get back into it next week. And so our website, blevinsfranks.com. I'd recommend anybody who's interested in these topics or themes, have a look on our website. Have a look, we've lots of resources there, but even better, get in touch with one of our local advisors in the area where you're based. And we're always more than happy to have a no obligation complimentary discussion and see if we can assist you.
Well, as well in Spain, I'll say, hasta la semana que viene.
Muy bien.